Hello, everybody. Jim Malone here, coming to you live on Thursday afternoon at 5 on Dallas Trading Floor. Well, it looks like Microsoft is doing better than some of the other AI companies. Apparently, it looks as if it looks as if it's going to be a battle over the AI. The overall market was down today a little bit, so we'll see. We'll kind of see what's going on. What happens here, but AI, the stock that I was talking about yesterday, that was down a little bit. Also, the indexes were down. The Dow was down just a little under 1%. S&P was down as well. Nasdaq was down. I was taking a lot of profits today, doing some selling. And so I've pared back on the number of shares that I have, but still, according to the Bulls versus Bears, we're still pretty good out there. The Bulls are outnumbering the Bears here. What this is the stock newspaper stock writers, and there's definitely a bullish a bullish bias here. 48% are saying that the market is going to probably head higher, which I do agree with, and the Bears are about 25%, and the rest are undecided. But it does appear that the Bulls are in control, at least for right now, with the market, even though it was down today. I wanted to show you real quick about my market prediction. And basically, I am saying that today the spider closed at 407.09. I think it has, I think the floor is about 390, and I think the ceiling is about 431. So we closed down a little bit today. I mean, I think we're probably going to be maybe tracking lower by the end of the week, but I definitely think that we're still within the range. So I don't anticipate too much of a change. I think it's really a sideways market. What I'm doing is I'm getting in close to the 21-day exponential moving average. Then if I see a profit, I'm taking it pretty quickly, and then moving on, trying to find other ones that that are working. So that's kind of been my my take on it. It's kind of a swing trader market, not really a investing market. Kind of kind of tough in that way, but really a swing trader market here. Here's what I invested in today. I did buy 1/2 position in an Italian Swiss semiconductor company. Symbol on that is STM. It's called STM Micro. The reason I like this one, of course, is because it produces a lot of chips for the automotive sector, and so they still have a lot of pricing power here, and so it does look pretty good for them. So STM is one that I did buy today, but I did sell. I did sell PI. I sold On Semiconductor, and I've pared down quite a bit. Here's basically what I'm holding currently. And as I say, I've really been paring down here. I'm still in Amkor Technology, AMKR. That was the volume's up a little bit on this one today. The price was down about 43 cents, or about 1.44%. Still in Chevron, that was down 168. I may be pulling back on this one or changing it out for Exxon. I did a little study, and it does look like Exxon is performing better than Chevron right now. So that one might be a change. I still want to have my foot in the oil market, and I'm doing it with the big cap oil companies. PI, I still hold I still hold some of this, but I've been selling this today. It was up today, so a nice sale into strength there. I'm also holding the XLE, which is the Spider Select that covers both both ExxonMobil and Chevron. So it closes with, and then of course my new buy today was STM, or ST Micro. That was up today about 1.32%. So not a lot, but definitely like it when they go up rather than down. So that's kind of where I'm standing there. All right, well, let's get into some of the questions first. here's somebody. Hi, Jim. This is Malik. 1664444. Any thoughts on NIO? And of course, the Chinese automobile makers have started to see some love here. So I haven't really been trading this one that much. Mostly, of course, I've been trading the Teslas of the world, but I haven't really been in the automotive sector in a while. But let's take a look at NIO, because I know a lot of people do hold it, and it is it is a significant it is significant in stock in the sector. So we'll pull this up, there we go. There's the chart for NIO, and put this up for everybody on TikTok. There we go. Take a look at my screen here. Very good. All right. So just kind of looking at the last few months of NIO. We've been in this downward trend, obviously. That's been the case. The 200-day moving average is still sloping down, so not really a favorite of mine. It's got a relative strength of 10. That means that 90% of the market is better than NIO. Here's the thing. On the technicals, it's below every technical indicator, and the checklist is not very good. It's 56. So here's what I would say with NIO, and sorry, hopefully don't want to injure anybody's feelings, but really, it's really important when a stock pulls back 7%, you should sell it immediately and then wait for a better condition, because this can just continue to go down. And I think that's the case with NIO. I think it may rally in the future. I'm not writing it off, obviously, but if you look at the chart, you just have to agree with me. I think that it's just not really. Let's see if I can get that up there. If it'll let me. Well, kind of. My windows are. There we go. So hopefully this will give me a window here. I'm just going to try to go full screen. No, heck. I'm going to see if it will exit full screen. It doesn't like to give me that, does it? I've got an issue with this. There we go. There's NIO, and hopefully we can see it. Let's see if I can clear this up a little bit. Yeah. Sometimes these windows don't quite work as well as we'd like to see them work, but try to put this in play. There we go. So this is the weekly chart for NIO. I mean, yeah. Well, maybe I can get the shape right. It just doesn't want to shape it correctly. Okay, so this is the chart for NIO over a period. Let's see if I can get a daily chart. And then let's get a weekly chart. Okay, let's see if we can get a weekly chart now. It'll give me that. Yeah, there we go. All right, so this is the weekly chart of NIO. As you can see, I mean, really I don't think you want to be in this one. It's just this downward trend. It's just not looking good. So, relative strength of 10, I just think you got to skip it and just kind of move on. Remember, if you're down more than 10, if you're down more than 7%, it's always a good idea to possibly consider selling it. Just one of the things about this game is you always want to maintain your capital. So that's the most important thing. That's really the most important thing out there, is to really try to maintain your capital. All right, Bombadoc, BTU, cheap and earnings next week. Could announce paybacks. Yeah, you know what? Definitely true. I mean, BTU, of course, that's Peabody Coal. They're one of the largest. I think they are the largest listed pure play coal company. Is BTU very well run? And definitely something to look at. It's got a very low P/E ratio. Let's jump on over to that. Let's show that on the screen. There we go. So BTU, it's been moving up very nicely. Compare this to a NIO, and I think I think you can see what I'm talking about in terms of thing. Relative strength of this one is 89. So this one is in the top 11% of all the stocks out there. This is the kind of stock you want to definitely take a look at. And let's look at some of the other factors here. Very strong checklist. It's a 78 checklist here. Very, very strong. And on the technicals, very, it is somewhat viable. Here's one thing I do a little bit worried about is that it has a downward trending relative strength line, but other than that, it's looking very good. Let's see if there's a place that we could buy it. It's pulling back to the 200-day moving average. That's this black line here. That's this black line. So that's looking good. That's a good place to buy it. We don't want to buy it in a downward trend, but it does look like it's starting to form an upward trend, sort of in a channel here between a high up here and a low down there. It does look like it's starting to make a channel here. You want to wait for it to bounce. It's probably going to bounce off of the 200-day line and then continue upwards like that. So that would be my guess here. What's going to happen to BTU? We've got earnings in 4 days, so got to be careful there. Probably not the best time to buy it before earnings. I'd wait on this one until earnings just to be a little bit safe. But it does look like it's kind of going sideways. But it's within this channel, and the low is about 25, and the high on the channel is about 35 or so. So it's kind of in this channel. I definitely think it's going to bounce here. Strong stock. Let's look at the fundamentals here again. Peabody. And here's the thing. It's getting ready for earnings, but look at these earnings numbers. A year ago it was only up 6% in sales. But then it kind of started and, up 83% in sales, up 98% in sales. I'm sure that the sales will be larger than 20% up this time. And look at these profit numbers. The last 2 quarters has been phenomenal, 490% up in terms of earnings per share. If we look at the 2023, the forecast is for the profits to improve about 2%, but this quarter, and this is one that's going to be reporting here in 4 days, the 2022 quarter up 114% with a little green arrow, so that may even be revised up. So I do think this is going to be good, and they may do a buyback, but looking very, very strong. I agree with you, Bamadoc, and I just think that it's a great stock, and definitely I probably wouldn't buy it into earnings just because that can be a little bit different. That can be a little bit difficult, but we shall see. All right. Somebody's asking about the spider, and this is coming from TikTok here. Okay, let's analyze the spider here. It has been down 2 days. I was selling off today just because the market was telling me so to do that, and I'm glad I did. Reduce my number of stocks from about 8 down to 4. I've been taking profits today. We'll see what happens tomorrow. But you're right, it was the second day down. I think it's gotten a test here, and let's see if it's going to reverse. Can't always tell, but if we look at the 10-minute chart, typically we're going to get some ideas. So, okay, definitely some buying came in at the end of the day here on the volume. You can notice these blue spikes, and we did have the last tick was a blue spike. It came all the way down here to 400. I think that the floor for 405, 406, excuse me. I think the floor for the spider is about 390, and I think the upward limit is about 431. So the question is, will it bounce here? It's definitely looking like it's going to be, it's probably going to trend up tomorrow. Again, it's just really been moving sideways, and that's a tough market to trade as a sideways market. Just kind of been moving sideways. If we go to the weekly chart, you can kind of see what I'm talking about here. It's sort of stayed within sort of a range from about here. That's about the 435, 431 area to down here, which is a little bit, this isn't quite exact, but that actually it's really right here, about the 390 area. And as you can see, it's sort of in this range. It does look like it's probably going to reverse higher tomorrow, but let's see how it looks on the 10-day line. That's going to be the key. So let's go over here and see what's going to happen with the spider. Yeah, I definitely think it came down to the low. I think it's going to get some support here, either at the 10 or the 10-day line or the 21-day line. Let's see where the 21-day line is. So do kind of expect it to. It might pull back as low as about 403 before it reverses, but I definitely think we're going to see it reverse higher. That's what I'm seeing anyway. So we'll see. You can never tell on these things, but we'll see about that, what happens. All right, Mr. Cheat, thank you so much. Let's look at NET and ACLS. So let's look at ACLS first. I had ACLS. I did sell it. ACLS, Axcelis. This is a Axcelis Technology. This is a chip equipment type of play. And boy, look at that. It was nice today. Again, I sold mine. I probably shouldn't have. I bought 50 shares basically on the 9th. Well, did I? And then I think I sold them. Yeah. No. Yeah. And then I sold. So actually this is wrong. It should be the 8th here, but so we moved in there nicely. Again, how can you? Here's what I see when I see this. I see a handle here, and I typically like to buy. I like to buy as it's pulling down to a to a support line, which is the 10-day line on the reversal. That's usually where it'll make a move. It made a tremendous move on earnings. Very nice earnings play. This probably will be up tomorrow. It's up a little bit after hours. So I think ACLS, you probably could come into this. I sold it, at 121. I really missed out because it went all the way up here to 127. But basically, I had it in here, basically from about there to there, and then I didn't get the upper 10 because I had a sell order in, and then c'est la vie. That's what happened. It went up and then pulled back, and then I was out. So, but I definitely think that this one, is consolidating here, and this will be up probably tomorrow. So you might want to put this on your list. If it moves above about 125, that might be a good area to get in to ACLS tomorrow. I think you probably get 2 or 3 points there, and it might be a good play. Might be a very good play there. So, ACLS looking very good. Definitely one that I had, and I did sell it. I sold it at 121, probably too low. It went all the way up to 127. So kind of sad about that, but hey. You win something. I won that one partially, but not all the way. So let's look at NET. This is the other one, that Cloudflare. This is the security software company, obviously. I've been trying to get into these. I'm just trying to find a place to come into it. I haven't bought any of the security software companies yet. It definitely is moving above that 200-day line. That is a good thing, but it seems to have flattened out. It's only got a relative strength of 31. So I'm kind of being a little bit more cautious with this area of the market. I'm really concentrating right now on the chips because that's where the increase in strength seems to be in the market. So I'm really concentrating there. So I probably would skip this one. Also, it's extended. The 21-day line is it's 10.74% above that 21-day line. You want to try to buy that within 5%, that 21-day line, and that's definitely not the case. So ACLS is a yes, and NET is a no. So I would be. Here's the thing. I think ACLS is definitely viable, but I think that I think with net you got to be careful. So ACLS buy above 125. So that's kind of where I see it for for ACLS. That's kind of where I see the buy point is above 125. That's kind of where I see it. So let's put the ACLS chart up there. There we go. All right. So here we go. This is kind of where I see the this is where I see the opportunity. Right here, above about 125. So right about here. So that's what I think is going to happen. It closed right about just a little bit below that. So if it's above 125, I think it's probably going to move higher. It closed at 124, and then after hours it went to 125.25. So I definitely think this is going to reverse higher tomorrow. But be a little bit careful about this. We're getting a little bit far away from that 21-day line. We're at 13%, so it is extended, and you have to be careful buying in here. So, but I think this could make another move tomorrow. But be careful buying it at this level because we are extended. So whenever you buy something extended like this, you have to put your stop losses in very quickly because a lot of times it'll pull back to within 5% of that 21-day line. So that's why I keep talking about the 21-day line ab nauseum. Okay. All right. Let's look at the Qs. QQQ. Of course, what the Qs are is this is the NASDAQ 100. Now, the NASDAQ was down today, so because the Qs represent the top 100 stocks in the NASDAQ, it was down a little bit towards the close. The Qs were down a little bit towards the close of the day. As you can see here, it kind of pulled back down to that 10-day line. It's a little bit up after hours. I think we're gonna have a bounce tomorrow and Friday. I think, we're still early into the season. The Santa Claus rally didn't really happen this year, so a lot of it's starting to happen now. There's a lot of money on the sidelines. A lot of the funds need to invest, and they're looking to put money to work. Now, interestingly enough, I think that the money is going to work right now in the semiconductor area. That's really the strongest area. There are some other software areas that are starting to pick up as well. And one of the ones I want to show you, of course, is Cadence Design, CDNS. I think that's the symbol. Yeah, Cadence Design Systems. The reason this one is so good is because this is the company, along with Synopsys, that does a lot of the creates the software that is used to design chips. So it's an important technology. This, of course, is Cadence. CDNS. There we go. So here's the thing with Cadence. It's sort of coming to a point where I think it's possibly viable. Here's the reason I'm kind of bullish on Cadence right now. If you'll notice, it's almost at its higher high. 194 is sort of its higher high. It's getting close to that. It's 184 right now. This isn't truly this is a sort of a cup formation here. It's very likely to come up to this. Once it gets there, it's going to have to make a decision. But right now, the only problem that I'm having with Cadence, it's a little bit, it's actually not extended that much at all. It's only, let's see if I can see that. Yeah, it's about 3% above the 21-day line. This is a good place to buy it. Would be right here, because I do think that Cadence is going to move higher. Let's take a look at the technicals on it, and let's look at the checklist first. Cadence Design has a 100% checklist. I really like to buy these strong stocks, the stocks that have, the strength. This has got an 89 relative strength, so it's in the top 11% of all the stocks currently. It's got a 100% checklist, and it's making an all-time high, which those are very, very good signs that it likely is going higher. So this is what I want to point out to everybody. CDNS, Cadence Design Systems. And so it's a very, very good stock to take a look at, possibly buying tomorrow. All right, let's see. Is this a bear market? Well, sort of, not really. Why are the oil stocks getting hit after good earnings? Well, the reason is because the capital, and this is the thing, and this is something that's really hard to fathom. The capital moves around from different sectors in the market. It moves from one side to another, and in the last year or so, oil services had been really a great sector to be in, but now we're starting to see some profit taking there, and we're starting to see the stocks move into another area of the market. And the area that, again, that I really am looking at right now are the chips, not the big chip companies, but even though NVIDIA has done very well, but the chip companies. Let's take a look at LSCC. This is Lattice Semi, LSCC. There we go. And see kind of how that's doing. Now, I took profits on Lattice on yesterday, but I still really like the stock, especially if it pulls back. You see, there we go. Sold. I sold out at oh goodness, where did I sell? Yeah, but I did sell this. I wrote it up and then I sold it. This area of the market I really like right now. Electronic semiconductor fabless. It's 3 weeks ago, this was on the bottom of the this is the bottom sector. Not too much happening here, but that has started to change. Let's see if I get it's not letting me see it. Okay, let's go over here to PI. This is one I still have been taking profits on it. It's all over the place. But it's up after hours, 125. This one also, I think, is worthwhile taking a look at. It's sort of forming a handle here, cup with handle, 98 relative strength in the top 2% of all stocks. So this is one you want to look at too. I like to be trading in the 90% range, the 85 to 95% range or better, because I want to be trading the top 5 or 10% of the market. I really don't like to trade below that because it's not as profitable. just to be blunt about it. So here's what's happening with PI. That's another one that we ought to have on your list at least. We did come through earnings here. The sales were up 46%, profits up 156%. So this is one of the strongest stocks out there. It has a very high PE ratio, so that might be a turnoff for a lot of people. 132 on that PE ratio. But the interesting thing about this particular company is they make these RFID tags, and there's a lot of demand for them right now. And so this company is doing very well. And I definitely think that you can still get in here. Let's take a look and see how close to the line it is. Well, I got to go to the set of the weekly chart, the daily chart, to take a look at that. Let's go over there. And what we really want to do is we want to buy this as close to the 21-day line as we can. And right now at 125.82, this stock PI is right on the 21-day line. So this is actionable right now. This is a stock that you could buy, and I think that you could definitely ride this one higher. So PI is viable now, and so this is interesting stock. I'm probably going to be back in this one. I did take profits on this one, but I'll probably be back in this stock. Because I do think that it is going to move higher. All right, let's take some questions from YouTube. All right. Oh, hey, thanks, Matt. Matt's asking about TITN, Titan Industries. I believe that's Titan Industries, if I'm not mistaken. And let's see if I can. I'm trying to turn off my, TITN. Let's go put this up. Oh, Titan Machinery. Sorry, I thought it was Titan Industries. For some reason, I thought I think there's a Titan Industries as well. Not an area that I'm that well versed in. Wholesale building products. Still very, very strong in the market. 96 relative strength. That's excellent. But we're starting to see some sell-offs here. I would avoid this one. I would avoid this one because it does look like it's starting to lose strength here. It's still doing well, but I think it's kind of an outlier. So I would be careful with this one. Probably would not be a buyer of Titan. I probably wouldn't buy it. Probably wouldn't be a buyer there of Titan. All right, let's see. Ice cream. Sent text. ATVI. This is from Tamar, I think it is. ATVI. Let's look at ATVI. See what we got going on there. ATVI. And that is Activision Blizzard. This is, of course, computer gaming. I think they're the biggest, or very close to Electronic. I don't know if Electronic Arts was bought or not. I'm really not all that interested in this right now, and I'll tell you why. There's a lot of good stocks breaking out, but this one is below the 200-day line. It did come up to the 200 line, but it got rejected, and it's moving. It looks like it's moving lower, making an attempt at the 50-day line. I would avoid this one. I definitely think it's probably gonna. I think it's likely to move lower. So Titan probably wouldn't be in that one, at least for right now. Okay. Right. INDI. Let's see. Okay. Oh, IndySemi. Okay. I definitely like the semiconductor stocks, as you can probably tell by the show. Now, I haven't always liked them, but right now they're sort of my friend. 72 relative strength. That's kind of weak. $7. I'd probably avoid it. Let's see if I can look at this semiconductor fabless. There's a lot of stocks in that area. It's not allowing me to see the semiconductor fabless chart, but I just think there's a lot stronger chips in this area. The ones I think that are the best in this area are going to be, well, onsemi. I just sold it. This is very strong here. See, instead of buying stocks that have a relative strength of below 80, why not buy a stock that has a relative strength of 94? That means it's much, much stronger. You want to buy the strongest stocks that you can. And I did just sell this one, but this is the kind of stock I think you want to be interested in. I know that the other stocks are cheap, and believe me, when I started my career, I was all about buying penny stocks that cost below $10. But I just got burned so many times that it got to the point where I learned my lesson. I bought fewer of the better shares, so that's what I do. Hey Jim, I wanted to add to my BTU position since it is at the bottom of an uptrend. Good. What do you think? Your thoughts? I think there's a good chance. I think there's a good chance with BTU. I like BTU. We're starting to see a little bit more sensible pricing in terms of the coal area. It wasn't quite as cold a winter as people thought it was going to be in Europe, but I think you could add now. But here's the thing: when you're doing an ad, let's say for instance you go in with 100 shares, your ad typically the best way is a third of is a half, a quarter. So if you go in with 100 shares and you want to add, your ad should be probably no more than 25 to 50 shares. It really shouldn't be. The best way would be to pyramid. 100, 50, 25. That would be your best kind of way to go in. And that way you get this, you maintain that lower cost. That's the key, is that lower cost there. Please take a look at Lilly on the fundamentals. Okay, let's take for Lisa. Thank you, Lisa, for always watching on my show. I so appreciate it. Your questions are excellent, and I just really thank you for tuning in. LLY, of course, major drug manufacturer, Lilly, Eli Lilly, based in beautiful Indianapolis, Indiana. Lilly has been pulling down. This is probably not a bad place to buy it, because if we draw the reversal line, it came right up. You see, it's been pulling back. It got support at it got support at the 200-day. It's moved through the 50, and it's right at the 200. So this is an excellent place to buy Lilly, actually. And if we look at the technicals, it's right on that 200-day line. I mean, that 21-day line. So that's very, very good. It's also got enough relative strength at 84. I typically like to be in stocks that have 80 or better relative strength, because we want to be in the best things. But this is looking very good. Came down, tested the 200, is making its move higher. Good place to buy Lilly. So that's technically, Lilly is looking good. Now let's look at the fundamentals for Lilly. And of course, for everybody out there, the difference between technicals and fundamentals are this. Technicals are the chart action, like we were just looking at. Fundamentals are the actual price and earnings and that kind of thing. To choose a stock, you really want a combination of both, not only good chart action, but also good profitability and that kind of thing. So it does look like they just came through earnings. Their sales are up 14%, which is amazing for a company this size. Their profits are up an incredible 113%. Now, Lilly typically is they're one of the largest manufacturers of insulin in the world. A lot of these purchases of insulin are now government subsidized, so they kind of have a built-in market. A lot of funds are in this one, 643. Let's look at their profit projections, their estimates, and it's showing. It says that they're going to be higher than last year, but they're not showing anything. In earnings per share, they say they're going to lose 1 cent a share. I don't know. That doesn't seem okay. So that was Chewy. So that's why I was like, why is this looking like this? Okay, LLY. Sorry, guys, I had the wrong chart. I'm like, why is this? This isn't right. Okay, now we're good. There we go. Okay, so what's going on here? All right, came through earnings. Their sales were down. Okay, this makes more sense because it's a large size. Their sales were down 9%. Profits per share down 4%. So it's got a declining. I don't like that. PE ratio, it's a little bit high at 43. For a stock this size, it should be about 24, in that range. Return on equity is really good because it's very highly leveraged. Let's look at okay, so they say this year their sales are going to be up about 7%. That's pretty good. Yeah, I mean, I think this is a good, solid, middle of the road stock. This isn't gonna, this isn't a growth stock. It's a stock that's been around forever. PE ratio is 43. Yeah, it's okay. I mean, I like the chart action on the fundamentals. It's okay. There's better ones out there than that, but that isn't bad at all. All right. Let's see. Okay, Trader. Let's see. Let's review Tesla. That'll probably be the last stock today. That has been phenomenal. I tell you what, I missed that. I mean, basically on the follow through day, which is January 6th, Tesla was selling at 108, and now it's a lot higher. Let's take a look at it. And I missed that. I kept not buying it. I guess I don't believe enough. That's my problem. It's looking very, very good. Now, there is resistance on Tesla, but I don't think it's going to happen until we get to about 200. And we're definitely above it. So it moved through resistance. Wow, this is good. And now if it can move through the 200-day line, yeah, this is probably going to go higher. I mean, theoretically, I mean, the next stop was going to be about 237 right there, where the 200-day line is. So, yeah, I mean, and look at the buying that's come in here, just very strong. So yeah, this probably has some more legs. So even at this price, I think it's a good deal. It's up after hours. It's been up 1, 2, 3, 4, 5, 6, 7, 8 days. Probably going to pull back. This is when you want to buy on a pullback if we get a pullback. So if we get a pullback on this one, then I think that it may be worthwhile buying it because it does definitely look strong. I think it's pretty much, if it clears the 200, it's smooth sailing to about 237. So very, very good stock right now. So my mistake in not buying it. We all did miss Tesla. I I like to think that when a stock is moving like this, I'll make a move on it, and I didn't. I was like, I'm not going to buy it below the 200-day line, and I didn't. So my my mistake there. TJX. Let's look at TJX as well. Let's look at TJX. And that's TJ Maxx, the fashion retailer. They seem to be a very well run company. I'm currently not in any retail stocks, but if retail is many times one of the best areas to be in the market. If you again and again, here's the thing: I wouldn't buy it until earnings. I'd kind of wait on it. We've got earnings in 13 days. It's pulled down. It looks like it got some support at the 50-day line. The relative strength is 90. That's very, very good. I did take a position on the 25th, and I got stopped out. I had a very tight stop loss. I thought we're going to move above 83 here. What happened is, well, I had my 2% stop loss in, and it came down, and then I was out. So, but you can see where I did buy. I bought a few shares at basically a half position right there, but it pulled back, and so I was out. I was out. Look, good stock. I might try it again because it definitely has a handle, and you can see it's moved above that handle. So that is looking very good. Let's see how close to the 21-day line it is, just real for fun. Yeah, we're right on the 21-day line. If you're going to buy it, this is where to buy it, at the 21-day line. So very good stock. Very good stocks, Sarah. And let's look at PCR. You could definitely buy TJX. Well, let's see. We did Lilly. We did Tesla. All right. So Trader. Yeah, we all missed. Wish we hadn't missed that one. PCR. Let's look at PCR. That'll probably be the last one tonight. Okay, come on, baby. PCR. Heck. Well, that's coming up. Let's take one. We did Activision, Blizzard, oil services. Okay. So that's pretty much it. I wanted to show you some actionable stocks again. I think Cadence Design, CDNS, is actionable right now. I think Cadence is. I also, that's the one I'm really honed in on. But that one I do believe is actionable. Well, everybody, thanks for taking a look at the show. If you haven't already liked, please hit that like button. It really helps us get out there to a lot of people. So smash the like button, and smash that like button, and we'll be back tomorrow, of course, at 5 for Friday, and hopefully have some kind of a Friday roundup of the stocks that I'm trading, and I think that work. But smash that like button. Really, really appreciate it when you do. If you're not already a member of Dallas Trading Floor, it's super easy. Either go to www.dallastradingfloor.com, or if you're watching on TikTok, you can go to the link in my bio, click on that, and you'll be able to sign up for that. There's a lot of good freebies in there, and I'm going to be probably working on my stock trader bookshelf, and hopefully I'll have that done, in a few days. All the books that I think that I read that really helped me out, and so until tomorrow, everybody, thanks for taking a look and watching, and happy trading.